What I love about DeFi at the moment is that there can be a big liquid fund putting 10, 20, $30 million into a lending opportunity. And at the same time, an average person with $100 or $1,000 can do exactly the same thing.
Hello everyone and welcome to the Web3 CMO Stories podcast. My name is Yuri Vilast, I'm your podcast host. And today I'm in Sintra and I'm joined by Tobias. Hi Tobias, how are you?
Hi Yuri, yeah, all good. Thanks for having me.
Guys, it's amazing that we can record the podcast outside. If you don't know Tobias Van Amstel is the co-founder and CEO at Altitude. And we will talk about how DeFi is redefining the future of borrowing. Yeah, so Tobias, let's go for the walk.
Sounds good.
Tobias, you've built and used DeFi before it was fashionable. So when you look at traditional lending today, what feels fundamentally broken from a user's point of view?
Yeah, that's a great question. So I think it's interesting that in traditional finance, it's very easy to get a loan based on your salary or your income. But it's much harder to get a loan against an asset. And so the bank is very happy to let you borrow against your future salary. So basically your future income, lets you spend that today. But if you already own assets, then it's much more difficult for them to lend against those. So mortgage is obviously an exception where you can get a mortgage against your house. But other than that, it's very hard to get them to lend against your assets.
Many people still see DeFi lending as speculative finance, yet your user stories are about homes, land, everyday life goals. So what shifted your own thinking from yield chasing to real world impact?
Yeah, my own journey in DeFi also started speculative. So I had accumulated ETH and started borrowing stables against it to deploy during DeFi summer and earn the high incentive yield. And then when I needed funds for myself, I needed to offer him some funds. What I realized, because I borrowed against my ETH, is I didn't need to sell my ETH anymore. I could just use the funds that I borrowed and offer him those. So that's when kind of my thinking started to shift, when I needed funds in the real world and I had funds in crypto.
Okay, and then if we zoom out, how does borrowing against assets like BTC change psychology of money compared to selling assets to fund life decisions?
So I think one of the psychological implications of borrowing against your assets instead of selling them is that there's less of a need to sell your asset. So let's say you bought Bitcoin at $5,000 and then you see it run up all the way to 100,000. That's still a paper profit. And you might be thinking, okay, I've ran it all the way up to 100,000. What do I do now? Do I sell it? Do I keep it? And so if there's a third alternative, which is borrowing against it, then it allows you to kind of use some of that realized profit or unrealized profit without having to sell the asset. And so that means that you can hold on to your BTC. You can keep holding on to it as it grows, as it appreciates, and you can keep unlocking liquidity against it. So selling becomes a choice.
Yeah, for me it makes a lot of sense. Now, the listeners to my podcast, it's a mixed audience. There are also a lot of listeners are marketers and founders, maybe not DeFi natives. So what is the simplest mental model to understand how a self-repaying loan really works?
Yeah, that's a good question. So let me compare it to something in the traditional finance world. So let me compare it to a mortgage. So let's say you own a house and you've owned that house for a while and your mortgage is now about half of the value of your house. So let's say your house is worth $1 million and your mortgage is worth, your open mortgage is still $500,000. Now, you can just let that situation sit, or you can go to the bank and say, can I borrow some more money against my house. Well, the bank will look at that and say, okay, your house is worth $1 million, your mortgage is $500,000. Okay, we're happy to lend you up to 80%. So here you go, here's $300,000 that you can borrow. Now you've borrowed at $300,000. Then instead of spending it, what you do is you invest it. So you invest it at, let's say, 8%. Then you're generating 8% on that 300,000. You owe the bank the interest, which let's say is 3%. So you're earning 8% on your 300,000 and you're paying 3% on your 300,000. So that means that every year you're earning $15,000. And that $15,000 you can use to reduce your original mortgage. So then your original mortgage is going down. And then a few years later, you can do the same thing. And hopefully your house will keep going up in value. Your mortgage will keep going down and the gap gets bigger and bigger. And you can do this all over again.
Yeah, actually, sounds really like a no-brainer to me. Now, DeFi promises financial empowerment, but trust is still the biggest barrier. So what are the key trust signals users look for before they dare to borrow on chain?
I think in DeFi, my number one is transparency. If the platform or the protocol is not transparent about its rules or about the assets or where the assets come from or where the assets are, that's a big red flag for me. So transparency is number one. And then the second thing is kind of the security of the code. And you can look at audits that have been done on the code. You can look at how long the code has been live without having been exploited. So those are the two biggest factors I look at. And then the third factor, which I think is still very important in DeFi, is the team behind it.
Yeah.
So is the team anonymous? Then I would be very, very careful. If the team is not anonymous, look at their backgrounds, look at how long they've been in DeFi, do a simple Google search to see what their background is. And then I think those three elements are key for trust.
We are almost arriving in the center of Sintra Old Town. So if you're now watching the video, you will see where we end up. Yes, I totally agree with trust, and certainly because people, they hear a lot about scams in Web3 and they are really, really careful, certainly now these days with AI. So really knowing the team really matters. So I also work with other companies, like for instance, the sponsor of my podcast, Rio. It's a Japanese ecosystem, but I know the founders. I met them like I met you now, right now, which makes a whole difference.
Yeah, it's so important.
It's so important. Now, let's talk about your company, Altitude. Looking at Altitude's growth and user behavior, where do first-time borrowers struggle most, and how do those insights shape your product decisions?
I think first-time borrowers, the biggest hurdle in DeFi is still the very steep learning curve when you start using DeFi for the first time. So figuring out which wallet to use, then moving your assets from your centralized exchange onto your wallet, and then dealing with gas fees, dealing with all the security around it. I think that's the first big hurdle that people have to go through. And then the second big hurdle is to understand the concept of borrowing against your assets and understanding the platform or the protocol they want to use. And yeah, figuring out what is the best for their needs. And so how that affects our product roadmap is that we've now built a loan optimizer.
Okay.
That's with very simple UI UX, where people can take a loan and we finance the loan at the lowest rate. So we make it very easy for people. You don't have to look at lots of different protocols. Just borrow from our platform, our protocol, and then you're at the best rates. How it affects our future roadmap is that we are trying to simplify the onboarding experience. So by integrating wallet infrastructure, by building on-ramps and off-ramps into the product to make it easier for people that have never used DeFi before to start in DeFi.
And here we are, Tobias, in Sintra Old Town. By the way, maybe you heard, but I'm doing a retreat, an AI marketing retreat here in Sintra. So if you are listening to the show, check out the video, then you see what Sintra is all about. Now, my next question, we have seen hype-driven yield come and go. So how do you personally distinguish sustainable real yield from marketing-driven incentives in DeFi?
So I think it's important to realize that in the current state of DeFi, I see 4 distinctive types of yield. So yield number 1 is the yield that borrowers are willing to pay, because that's yield for the lenders. Then the second source of yield is the yield that comes from trading activity. So that flows usually to liquidity providers, trading fees. Then the third type of yield at the moment is a yield from RWAs. So where the yield is actually generated off-chain, but is funneled, is basically moved from off-chain to on-chain. And then the fourth is still incentives. And so I think all 4 of them have their pros and cons. And when you're trying to earn yield, you just have to understand which type of yield are you earning and if that suits your kind of risk appetite. I think those are the 4. Incentives are still very much real. Just be careful with incentives that obviously when they're not liquid, so when you can't trade them, you don't know how much they're worth. And so that's always an interesting one. So you might think you're earning a certain amount, certain yield, but then when a token starts to trade, that yield might be much higher or much lower. And in recent times, it's usually been much lower.
Yeah.
That's why at Altitude, we try and focus on the yield that we know is real and you know exactly how much you're earning, which is a combination of the RWA yield, the trading yield, and the borrow yield.
Makes sense. Indeed, liquidity, really important. I've seen already a lot of things happening, or accidents even, happening in the crypto world. Now, Tobias, as someone who has built multiple companies, how did your role as a CEO change once you started building financial infrastructure instead of software or marketplaces?
Yeah, I think the biggest difference is in the quality of the software, the reliability of the software, potential bugs in the software. I mean, in my previous companies, the impact of a bug in the system was a user that wasn't particularly happy, that maybe was a little bit frustrated because something didn't work. In DeFi, the result of a bug can be loss of user funds, which is unacceptable. And so it's comparable to building software for the medical industry or building software for the airline industry. The quality of the software needs to be top notch. You need to spend a lot more time, not just building the software, but then testing, improving, running multiple audits, and making sure that the software has no critical bugs.
Yeah, absolutely. Financial transactions is different than creating some marketing content like we're doing here right now.
But there's also a beauty in, so those are 2 different worlds, right? In one, you can move fast and iterate and learn, which is great. The other one, you can't make mistakes because you lose people's money. So they're just different ways of operating.
Yeah, indeed. Like what I do, I like to shop authentically. So I'm not an English native speaker, so I can make mistakes, but it's me. In finance, you cannot make mistakes, right?
Yeah.
So it should be correct. But I was wondering, Tobias, when you imagine conversations like the ones I will be having here at Sintra at my retreats, where marketers and founders reflect on AI and finance, what kinds of questions should leaders be asking now about DeFi's role, let's say, in the next decade?
The interesting thing is that obviously with AI agents, AI working autonomously, it needs information and it needs to be able to take actions. And if you compare TradFi and DeFi, in TradFi, all the information is behind closed doors. It's in investor portals behind passwords. It's your private banker that has maybe a department of analysts that only clients get to see the reports. Account balances are all hidden. You need to log in to see your accounts. And in DeFi, everything is transparent by default. The information is, the account balances are public. How the systems work is public. All the information is out there. All the transactions on the blockchain are public. So I think that's for me the first bit, that the information is public versus private. And AI can't do much with private information, but they can do a lot with public information. And the second bit, I think, is the action. If you wanted an AI agent to take action in the TradFi world, you probably need to give it your login details. I'm not sure the bank would allow, like, basically impersonating you. Whereas in DeFi, you just give it your private key and it can go off and do things. Now, obviously, you need to have kind of safeguards against AI making mistakes or going rogue. So don't just give it your private keys of your main wallet, for example. Be careful with that. But I think that will be a big shift, and that I think where DeFi is really, really valuable.
And finally, if we fast forward, let's say 5 years, 10 years, it's already a lot in Web3. But what would have to be true for you to say that DeFi lending has generally delivered on its promise of leveling financial playing field for everyday people?
At the moment, DeFi is accessible to everyone. But in TradFi, the best opportunities to invest are usually restricted. So there's minimum investment amounts, usually driven by regulation or regulatory requirements. I really, really hope that over the next 5 to 10 years, we can keep DeFi as democratic and as open as it is today, and not have gatekeepers everywhere and minimum investments amount everywhere. What I love about DeFi at the moment is that there can be a big liquid fund putting $10, $20, $30 million into a lending opportunity. And at the same time, an average person with $100 or $1,000 can do exactly the same thing. And I think that's how I see how DeFi is democratizing finance. If we go more to the TradFi world, it's just two separate things. You have product offering for retail, you have to have a product offering for the high net worths and the institutions. So if we can avoid creating that divide in DeFi, then I think it's delivered on its promise to make it accessible.
Amazing. We are now arriving at Quinta Tre Galera. I don't know if you've ever been there. It's a really beautiful palace here in Sintra. You have the Penna Palace, of course, but that one is also really beautiful. They have like a tower that goes into the ground. So it's...
Oh, wow.
Tobias, thank you so much for sharing everything about Altitude and where DeFi is going. If people that are now listening, they want to know more about you and what you are building, where would you like me to send them?
The best place to start is our homepage, www.altitude.fi, and that has all the links to our Twitter, X account, to everything else. So the best place to start is our homepage.
Amazing. So as my listeners know, Tobias, there are always show notes. Everything that you mentioned will be found in there. I will also put a snippet of the video in there, so go and check the blog article. If you think that this episode is useful for people around you, be sure to share this episode with them. If you haven't given me a review yet, now is a good moment to go there and give me these 5 stars. I would reach an even bigger audience. And of course, I would love to see you back next time. Take care.
Thanks, Yuri. Bye.